Another video. Today we're going to do another weekly market breakdown, but this time for the FX pairs. We are going to look at the dollar index, the USD, Euro USD, GBP USD, NZD USD, USD CAD, as well as the USD Swiss franc from a technical perspective. Now, if you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you want to help someone out there, smash the like button for the YouTube algorithm as well. Now, we had a question here yesterday from Mr. Brian Ball asking regarding the CPI data, can you explain why actual is greater than forecast is good for the currency? Now, there's two ways that we can go about looking at this. Firstly, depending on what kind of data you're looking for, right? So in case of the CPI, actual is not good if it's higher than the forecast. So if you look at unemployment, so unemployment would be lower, so the forecast would be lower and not higher. Now, for CPI, we normally want the data to be lower and not higher, and the reason for that is a lower CPI provides at least two major benefits for the government. Now, many government payments such as Social Security and the return from the TIPS are linked to the level of CPI. Therefore, a lower CPI translates into lower payments and a lower government expenditure. Now, what happens if the CPI is high? Now, when the CPI is rising, it means that consumer prices are also increasing, and when it falls, it means that consumer prices are generally falling in sort. A higher CPI indicates higher inflation, while a falling CPI indicates lower inflation or even deflation. What that means is we always want the CPI numbers to be lower and not higher. Higher is bad for the consumer, lower means inflation is lower. So just because this is green in a case like this, you need to use initiative to say that inflation is never good. So a high number for the CPI is not something good, it's actually something bad, because with higher CPI numbers comes more aggressive interest rate hikes, which is ultimately good for the dollar index, but it's not good for the consumer. So again, I've made a couple of videos on this fundamental data things. I would suggest you go back in time on the YouTube and just go watch those videos to get a better understanding. But that's the easiest way to understand it. Just because it's green, it doesn't mean it's good. That all depends on what kind of data you're looking at. If you were looking at unemployment data, then a lower number would be good. So if number lower than the forecast, if you're looking at the NFP, then a higher number because you're looking at an increase in jobs. So with that being said, guys, let's go and start with the dollar index here as well. I'm not going to go through the fundamental data. We know we're at the NFP that came through, more jobs were added. The unemployment rate still sitting at 3.6 as last one there as well. But we're just going to dive straight into it. I've got some CPIs coming through on Friday, which is expected to be higher than anticipated there as well. So we're gonna start here on the monthly time frame. So what do we see firstly? Now, I spoke about this market last week when the market was trading at that level, and I explained all the reasons. And so the market's now currently testing a strong level of resistance, tested it as support. We have the market printing that candle over there, where we can expect potentially for the market to fill in that week. We could also be at the start of a consolidation until that CPI numbers comes out, which is going to further lead into that interest rate decision, giving us a further indication we can expect this market to pull back, potentially wipe out that resistance there, or we could potentially, like I said, just be moving sideways until we get some short-term data. So the outlook for the dollar index this week is going to be bullish for the short term there as well. Now, if we drop down on the weekly time frame, what do we see? Firstly, the market that printed this massive impulse and that correction, you expect that continuation. And if you take your Fibonacci there from the low to the high of this massive impulse, you can see the market had tested, rejected the 50%, which is always what you expect after a massive impulse, which is a 50% pullback. And we can definitely expect the market to start with that continuation there as well. I can potentially see the market go and hit that minus 27 there from a weekly perspective. Here on the daily time frame, now I spoke about this market on Friday when this candle was still busy juggling itself over there. So the price action over here is quite very easy to read. So we have this level over here that the market had printed. This level over here acted as a strong level of resistance. The market broke below that, came to test it. Sorry, support got broken, became resistance. Resistance got broken, market pullback, hit that level, and we can expect this continuation to the upside. In doing so, the market also printed this inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Going into next week, once again, definitely expect the dollar index to be positive. I'm not gonna say for how long, but we expect the dollar index to be positive in the long term, as we know that the fundamental data drives the long-term momentum of the market. And in order to understand how strong a country's currency is, you have to always look at how strong their economy is doing, and they're doing quite well. Next up, we do have USD from a technical perspective. Now, if you start here on the monthly time frame, yeah, just waiting for this thing to load, my friends. I'm not sure if it's because I'm busy running a download inside. Okay, any case, so if you start on the monthly time frame, what do we see? Firstly, if you just look at the price action straight away, the market had printed this head and shoulders pattern over here, which is considered a bearish pattern. We also have this 50% candle to body wick ratio. So expect the next candle to go and fill in that wick. Market also printed resistance got broken, became support did not hold. All our supports once again being tested as resistance, giving us a further confirmation that we can expect that move to the downside there as well. Now, if you drop down on the weekly time frame, what do we see? Now, on the weekly time frame, we're at this massive impulse, we're at that correction. Now, if you take your Fibonacci over here from the high to the low of this massive impulse, you can see we had a 0.50% pullback. Again, that is normally what you expect after a massive impulse. Now, if you also look left over here, you can see that the market had printed strong support, broke below that, came to test it as a resistance, which is giving us a further confirmation that we can expect this move to the downside once again. Now, if you drop down on the daily time frame, what do we got here? Now, from a daily perspective, we can see over here that the market had firstly printed a strong level of resistance. Now, resistance got broken and the market's now back to test it as support. But because we're looking for selling opportunities in this market, we need to wait for the market to then break below this level of support, come back to test it as resistance, and then on that retest we can look for a continuation to the downside. In doing so, will the market also then print this head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Next up, we've got the Euro USD, and we're going to do the same breakdown from here as well. Now, on the monthly time frame, what do we have on Euro USD? Okay, let's just wait. There we go. Now, on the monthly time frame, we had this massive impulse. We also had the market broke below this very important structure over here in the market as well, and this is all liquidity that you see there. The market came back to test it as resistance. Eurus not doing too good right now, so we can definitely expect that further continuation to the downside there as well. On the weekly time frame, what is it that we have now from a weekly perspective? Similar kind of price action. Had this massive impulse, we had that correction. We can definitely expect this continuation to the downside. This looks like a 50% pullback here as well. No, that's actually a 61.8, which is even better for us. And if we drop down on the daily time frame, what do we see? So the Euro USD had not much that react off that NFP data as many other pairs that you can see. The market was like, okay. But we also have this head and shoulders pattern that the market created here. We also broke below this very important structure, came back for the retest. Again, we can definitely expect this market to continue lower, and I would probably, because we had broken below this level over here that acted as resistance, broke above that, became support did not hold, became resistance, broke above that, broke below support. All of this supports now once again turn the resistance. Going into next week, probably just a slight pullback, and then we can expect that continuation to the downside for the Euro USD once again there also. And then Gbpusd, I'm just going to go straight off the daily time frame, so that because it just makes it a lot easier. Now, here on the daily time frame, what do we see now? You have sorry, from a daily perspective, this is probably the price that one would need to monitor. This price here acted as a level of support, broke below that, became resistance, broke above resistance, tested it as support multiple times because looking for selling pressure. We are going to have to wait for a clear break below this level, and then on the retest we're going to look for some selling opportunities there as well. I would suggest the first target would probably be sitting at that level. We also have the possibility of this market could be starting this consolidation phase here as well, but I expect the market to continue lower this week for GBP USD as well. Next up we do have NZD USD. Now if you look at the daily time frame to look for an actual opportunity over here, what we can see here is that NZD USD had also is currently also trading had rejected this structural level in the market over there as well. The market is currently approaching very strong structure as we have anticipated over here. This level over here acted as resistance. The market broke above that, came to test it as support. Now there is a high possibility that this market is going to continue lower, but what we need to wait for is there's no problem with selling the market from there, but what we need to wait for is a clear break below this level, and then on the retest we can then start looking for that selling opportunities there as well. In doing so, will the market then print what's known as an information? After an information, you expect a pullback to the neckline before the continuation to the downside as well, and that's a further confirmation that we can trade to completion of an information. Next up we do have Usdcad, the USD Canadian dollar. Here on the daily time frame, what do we see? So on the daily time frame we can see that the CAD has been doing quite good, and the reason for that was the Canadian dollar had hiked interest rates in the lateral part of last week. The market had also, if you look left on the daily, the market had found strong support over there. We can expect a pullback from from USD CAD. We can potentially see the market pull back into that level and then potentially going lower. However, it would be very what would be very interesting to see is a clear break above that level, and then on the retest, and we can potentially look for further continuation, but we can expect this market to continue higher within the first couple of days into last week there as well. Once we get to this level, it's important that you monitor price action and see what do we get from that level over there as well. Next up we got USD Swiss franc, which I believe is consolidating, and we need to wait for a break of the consolidation, and then on the retest start looking for that continuation there on USDCHF there as well. Exactly. So what do I have over here? So this is very straightforward. So the market had been stuck within this consolidation phase, awaiting that NFP data, and that is exactly what we received there yesterday. Now the best way to approach this is very easy. This level over here acted as a level of resistance. Once resistance gets broken, it becomes support. So we are going to wait for the market to just break above that level, pull back, and then on that we are going to look for that continuation to the upside there as well, because we expect the market to go and we expect the dollar index to increase. I would say we'd probably start with that level, and then from there we can just kind of work our way to the upside. And that is it from my side. Thank you for your time. Thank you for taking out the opportunity to watch the video, and as always, cheers for years, my good friends.